Atul, how much longer do you see the Nifty in a range? Because after the June rally, it almost seemed for a moment that we were getting ready to snap out of that 4,700, 5,400 range. But do you think we'll need to spend much more time here again?
Yes, I think again we will need to spend some time, and it's purely because of global markets. As I said, that I see India as a relatively very strong market, and in case the whole thesis or hypothesis on global markets fail, assuming that they do not crack down, and even if they stabilize at best, I think I won't be surprised if you see the Indian markets get into 52-week highs and much beyond that very fast and very soon. The reason for my optimism again is twofold. Is that when I look at the charts, the two areas of underperformance really for Indian markets for the last year or so, I think have been resolved in the last 1 month. First is the Reliance pack. I mean, I for one who's been in the markets for very long, do not underestimate the power of Reliance as a stock and the Reliance pack in the markets. They are absolute sentiment changers. And this thing has been resolved very positively in the last 1 month or thereabouts. And you know, if you look at any of the charts, you'll find that these stocks have done nothing in a year. They've had a year or 2 years of underperformance, and there's a lot of catch up there has to be done in that space. And as and when these stocks get into the act, which I think will be sooner than later, you'll find that it will propel the whole sentiment in the market. So I think that the trade for the coming 6 months to a year is going to be the Reliance pack. It's going to have a lot of positive surprises on the upside. The second area is this whole OMC thing. I mean, something that we've waited for a decade, we've traded for and failed for a decade has kind of happened. And again, the kind of longer term charts that have been happening in these spaces says a lot. It says a lot for the government, for etc., and how you extrapolate the whole story. But I think that these are going to be two areas of strength, because this really comes down to the whole oil and gas space. You know, you've had sectors at lifetime highs, you've had pharma at lifetime highs, FMCG at lifetime highs, you've had autos at lifetime highs, but yet the index per se has not been able to do much. It's in a range, as you rightly pointed out, because I think we've not had the support of an oil and gas space, which is a very high weightage in the index, and the Reliance pack. So I feel that these two things getting resolved, the next move, if global markets even steady or do not crack out, will be propelled by these two sectors, and that's when we will get into new highs. But the theory that I still hold is that there is weakness in the global charts, and that's going to, you know, be a bit of a lodestone for our markets, and that's going to kind of keep it under check. Again, I said I don't expect them to crack like the way global markets would. They would at best, you know, be marginally down, and as and when the rallies come, I think among the earliest markets to break out, and the spaces are going to be the Reliance pack and I think the oil space.
What's the potential that Reliance has though, Atul? Because even on the really positive news flow days, basically the ceiling is at 1,090.
Exactly, Mitali. It's been stuck at this 950, 1150 kind of range, and it's become sort of, for many people, a kind of a no-brainer, short at 1150, cover at 950 kind of things. But I feel that this time, whenever it gets to those levels, I know it's not being showing the legs it would have been, but I tell you, it doesn't take long for Reliance to move things. 2 good days and you will find the whole market is going to pile onto the stock. But personally, I think that this time, once we get to 1150, we would have a breakout, which would propel the stock much higher to around the 1400 kind of levels. And this, I think, could be very crucial for our markets, the index as a whole, which, like the RPAC, has been in a range or underperforming, you would say, for a year or so.
What some fundamental analysts have suggested, Atul, is that step 2 for the market will be that it basically shifts its range higher. Not that there's a big breakout, but just that floor and ceiling move up. Does that sit in with your technical analysis as well, or do you think it will pan out differently?
I personally think that we would carve out a substantially higher level for that matter, because you know, if you look at, as I said, the components in the markets, the sectors, I just pointed out 3 to 4 sectors at lifetime highs, and this whole market has been loaded down by the oil and gas space and the RPAC for a year. These two issues are resolved. Really, you could have a market firing on all cylinders. You'll have pockets of underperformance, like maybe real estate, etc. But at the moment, they are not a major weightage on the Nifty, neither are the major trading space that there is. So I really feel that these two areas which were pulling the market down have got resolved, and I see it very positively. I mean, personally, you know, I really feel pretty disappointed with what's happening in the global markets, because I think we as a market were ready to really blow out and, you know, take out those ranges So as and when I think global markets resolve, India is going to take it out. Not just a range, but just take it out. And that's what I think it's going to be.
What about banks, Atul? Because last 1 month they have started underperforming a little bit. What's the bank Nifty suggesting to you?
Yeah, that is one area that would be of concern to me, Udyan, because again, banking as a space, by virtue of its weightage in the Nifty and its size and trading space, has a lot of weightage, and one would have to respect them. Banks, yes, they haven't really got into new ranges. There have been selective plays in the mid-cap space. But again, within they haven't been disastrous charts topping out on newer bottoms and things like that. So there has been no kind of pattern formation to tell me that the banking is topping out to collapse to lower levels. At best, I would say they are consolidating and they're a bit range bound at the moment. So as long as there is no disaster in the banking space, I think it's fine, because banking has a high weightage in the index and sentiment mover also. But the plays would actually come somewhere else.
The one sector we haven't talked about in ages, Atul, is capital goods. I mean, they had a phenomenal June series. They have high representation on the index. How are those stocks or that sector looking?
Exactly, Mithali. I mean, that again was shaping up very well, and that was very heartwarming because it is so intrinsic to the movement of the markets. Just a disclaimer that Rare Enterprises and I may have a vested interest in the sectors and stocks I talk about. The capital goods space, if you look at stocks like L&T, etc., they had broken out so well. Excellent, fundamental results and very beautiful chart pattern. So this was very, very heartwarming. And at the moment, they may have mellowed down a bit. But again, as I said, that when stocks come out of long patterns, they spend months and years in those things, those patterns rarely fail. They may not break out a couple of times. They may give false breakouts a couple of times. But sooner or later, they have to get into. So I think this could be another surprise, another feather in the cap for Indian markets. If and when they move, is the whole movement in the capital goods space. There have been some very encouraging charts. It may not have taken further steam right now, but I think even this is also going to get into it, be a surprise, and going to do a lot of catch-up. A lot of catch-up, like how the Reliance pack has to do a lot of catch-up. The capital goods have to do a lot of catch-up. And I think we will get into that space sooner than later.
What's the worst pocket in the market, Atul, according to you? Which sectors, the charts look the worst?
I mean, the real estate space, Udyan, I know at times, everyone's, whenever the markets move, you always find the leadership that comes in the case of autos, and you have it in pharma and FMCG, etc. But somehow, whenever the rally is tending to peak out, you have a lot of buy calls on real estate, and a lot of people jam into them. And as and when the market falls, you'll find that the biggest beating that happens in real estate. So a laggard remains a laggard till there is no substantial upward movement. They do move up. Every rally, everything kind of moves up. But the thing is that this is always the tail, and the tail never wags the dog. So for me, I still feel that the underperformers is the real estate space. You will have moments of performance, but it will be very difficult to make money, because the moment you catch it, you'll find that those are actually the turning points in the market. And when you get beaten down or when you exit, you get hurt a lot more than what you make on the upside. So I think that space still continues to be, I feel, a bit of a dog space. As I said, the tail doesn't wag the dog.
Good speaking with you, Atul. Good to hear a bullish voice.